Atul and Mithun are partners sharing profits in the ratio of 3:2. Now there are two partners, Atul and Mithun. They are sharing profits in the ratio of 3:2. The balances as on 1st April were as under. So the opening balances are given. Okay, it's mentioned as 1st April of the year. So it's the opening balance. Capital accounts are fixed. Okay, so when we transfer the profits or the loss, it would be transferred to the current accounts of the partners and not to the capital accounts, since the capital accounts are fixed over here. Atul's capital is 5 lakhs and Mithun's capital is 6 lakhs. Loan account Atul is 3 lakhs credit. Okay, it means Atul, since it's a credit amount, it means that Atul has given a loan to the firm. Okay, credit amount is a liability to the firm. And for Mithun, it is 2 lakhs debit. This is an asset to the firm. Debit amount is an asset to the firm. It means that the firm has given a loan to Mithun. It was agreed to allow and charge interest at 8% per annum. Okay, this is the interest on loan. Interest on loan is 8% per annum. Partnership deed provided to allow interest on capital at 10% per annum. So 10% will be provided on the capital. Interest on the drawings was charged at rupees 5,000 each. So the drawings amount is not given, but then interest on drawings is charged at 5,000 each. Profit before giving effect to the above was 2,28,000 for the year ended 31st March. Prepare the profit and loss appropriation account. Okay, now let's begin the sum. As always, first we leave some space for the working notes. We'll write working notes here and then prepare the format of the profit and loss appropriation account, debit side and the credit side. Okay, so now we'll prepare the profit and loss appropriation account for the year ended, whatever year is mentioned in the question, particulars, amount, again particulars, and amount. Okay, now let's begin with the calculations. Our first calculation will be for the interest on capital, but then since interest on capital is provided at 10%, the calculation becomes very easy for us. Okay, we can do it mentally. You just have to remove 1 0 at the end from your interest on, from your capital account, from your capital amount. So first one would be 2 interests on capital. The two partners' names Atul and Mithun. Atul's capital is 5 lakhs, so interest on capital would be 50,000, and Mithun's capital invested was 6 lakhs, so his interest on capital would be 60,000. So we'll bring out the sum of the total amount. Okay, after this, our next calculation will be for we'll got to write the by net profit. We have a little calculation to do for the net profit. Okay, see, the profits provided are 2,28,000. Okay, now we have the interest on loan as well. Interest on loan for Atul, it is, he has given a loan to the firm for rupees 3 lakhs. Okay, and interest is charged at 8%. Interest should be paid to him at 8%. So Atul, the firm will be giving 24,000 as interest to Atul. This is an expense to the firm. Similarly, for the other partner, Mithun, Mithun has taken a loan of 2 lakhs from the firm. Okay, 2 lakhs from the firm, and interest Mithun has to give is 8% to the firm. So now the interest that Mithun will give is 16,000. This is an income to the firm. This 16,000 is an income, and this 24,000 is an expense to the firm. 24,000 rupees the firm has to pay to Atul for the loan that they had taken from him, and 16,000 is an income to the firm. This is the amount that the firm will get from Mithun for the loan that the firm had given to Mithun. Okay, now these are our profits, 2,28,000. We've already seen that the profit and loss appropriation account does not include interest on loan. So now this interest on loan amounts, they will be adjusted from our profits in order to arrive at our net profit. Okay, so now our expenses are 24,000. So we'll interest on loan of Atul will be subtracted, okay, because this is our expense, and the interest on loan by Mithun will be added. 16,000 rupees will be added because this is our income. Now, so our total net profit amount will come up to 2,20,000 rupees. Okay, so now we'll put this 2,20,000 here. By net profit is rupees 2,20,000. The next entry would be for interest on drawing. By interest on drawing, our two partners, one is Atul and the other one is Mithun. Both of them get a drawing of interest of rupees 5,000 each on the drawings. Okay, so the total interest on drawing is 10,000. Now, when we compare the debit and the credit side, the credit side amounts are higher than the debit side amounts. So definitely the firm has incurred a profit here. Okay, so let's close down the accounts. Before that, we'll prepare the profit and loss, the profits to be transferred. We'll put the entry for that. 2 profits transferred to the two partners. Atul's current account, because the capitals are fixed, we'll write current account here, and the other person is Mithun. Mithun's current account. It's 2,30,000. 2,30,000. 2,30,000 minus 1,10,000 would be 1,20,000. This calculation can be done mentally. Now this amount of 1,20,000 will be divided between the two partners, Atul and Mithun, in the ratio of 3:2. So Atul will get a profit share of, for Atul it would be 1,20,000 into 3/5, and Mithun will get a share of 1,20,000 into 2/5. Atul gets a profit of 72,000 and Mithun makes a profit of 48,000.